Good morning, everyone. Today we're looking at USD CAD, which has broken sharply lower below the 138.83 swing support following Friday's Canadian jobs report and ahead of two critical central bank decisions this week, the BOC and the FOMC as well. So let's break down the fundamental shifts and then map out the technical levels that we need to pay attention to. Now, on Friday, Canada's labor market delivered a major surprise. Economy added 44,000 jobs in November. Economists had expected a loss, and the unemployment rate also plunged to 6.5, so 6.9. That was the biggest monthly drop since 2022. So three straight months of job gains, totaling 181,000 positions, completely blindsiding the consensus. So this changes the game for the Bank of Canada. At the October meeting, the BOC counted 2.25 and signaled the easing cycle was probably over. Now, with the GDP growing and jobs data coming in hot, markets pricing puts virtually zero odds of a cut this Wednesday, December 11. The BOC is expected to hold. On the other hand, the Fed is heading the opposite direction. We are nearly at 90% odds of a 25 basis point cuts on December on Wednesday, and this would take the Fed fund rate to 3.75 to 4 range, and that's the third straight cut driven by a cooling U.S. labor market and dovish signals from Fed Vice Chair John Williams and also Governor Christopher Waller. So the setup is, BOC on hold, Fed cutting, that narrows the rate differential and weakens the US dollar against the loonie. That's exactly what the loonie is, USD CAD is actually pricing in now. Okay, so from a technical perspective, we had this rally up to one like 43.38, and we ought to go and, of course, draw a Fibonacci tool, Fibonacci sort of leg to the downside from the top down to the bottom. 141.41 and 139.98, call it 138 if you want. And we have, of course, the 50% is right at the previous swing low at 138.7. A very, very, very important level. But as long as we remain below that level, the bias remains to the downside. Now we're looking at the 4 hour, of course, but that really doesn't change much, to be fair. But given where we are currently, what I will do, okay, I will go and also show you that importantly, we have broken this support. Okay, you can call it a channel, you can call it whatever you may want. That this as the 138.70 is a level that we need to pay attention in the short term. Now, looking at the February high this year and the bottom at 135.44, we came close to the 50%, right? And then we started declining, with, of course, the recent decline now opening the door to the previous low, but perhaps even lower. Why? Well, I will show you why. Because typically markets move in 5 waves. This looks like a 5 to me. Okay, that is corrective. You may call it a flag or anything else you want, it doesn't matter. And then the expectation supposedly would be for an equal leg to the downside. There is two ways to do this. Obviously, we rather just use the Fibonacci tool. Okay, we've come all the way close to the 50%. So the 61.8 is at 133.80, and the 100% gets us to 169, to the 129 handle, excuse me. So the idea here in the long term is to target the 129, right? In the medium term, I would probably just even say. Here's something more interesting. If we go a little bit and zoom out perhaps a bit more on the weekly, we're going to see another interesting pattern. Okay, and it never is really a copy carbon sort of formation, but what we do currently see is perhaps just saying, head and shoulders, right? So you've got the 1, the 2, the 3, the 4, and perhaps the 5 over here. And what typically happens in this situation is that I just not forget, guys, the head and shoulders is not a reversal pattern. At the bottom in inverse, yes, but at the top, not really. Most of the time, it isn't. But what happens typically is that we are correcting down to the 50 and 61.8 in this particular case, because it will be below the previous low, right? and then we would perhaps just like start moving back up again. Obviously, if we move lower to the 78.6, then there is a higher chance of a full reversal, and that would open the door to 120, of course, but this is very long term. But why I'm showing this long term pattern here, I'm showing this long term pattern because we are currently, if you look at where we start, okay, even if we did start here, right, and the previous lows, this brings us to the very, very, very important support level near the 136. Okay, if this is 2 weeks down, right? And we are in this week now. If we do in any way, break below that neckline, then would be heading to 133.90 and then the 130.68. Okay, and this is why we're looking at this currently. Importantly, on the weekly, we also crossed below the 50 RSI. Okay, so in my mind, the longer term USD CAD direction points to the downside, medium term points to the downside, and short term, I would say, well, short term, still points to the downside. But if all points to the downside, it means that on multi-time frame analysis, right? It means that we would prefer to go and short that. Okay. How you want to do that is a different case. Whether you want to go and get into this trade before the BOC or not, again, it's a different decision that you would have to make. But how I would trade it is like this. And you might say that we might not even get there, and that's true. But this is a big support that, of course, has not yet turned resistance. We would prefer that to be confirmed resistance. How that would be the case if we went up, retested, and rejected. So I would be putting exactly an entry at this particular level. My stop loss, let's just make it a bit more official, kind of more appropriate as well. Let's say we would just go above the 50%, because this is where bias shifts from bearish to bullish, at least in this particular, from this particular high down to that low. Okay, and then our targets. Uh, if we can use the entry here, or you can use the previous low or whatever. I would, of course, look at adjusting the target based on how deep we have corrected, and I would go for the 61.8 and the 100%. Okay, and that's the initial leg, right? Because let's not forget, we are if we continue lower, we are likely to go much lower than that level, right? So this can be a very good entry, if that makes sense. Now, some of you, if you look at it in that way and you are highly confident that this has a high chance of happening, you may as well just go and place an entry, like an immediate entry, if that makes sense, right? An instant short position. But either way, to me, this confluence of the 100% as well at the previous low is such a big confidence indicator, okay, that prices, as long as we remain below the 139 level, are more likely to get down to that level. Okay, so this is how I see it, and this is how I would play it. So obviously, we do have the BOC and the FOMC. This is what we really have to pay attention to this week. But bottom line, traders, USD CAD is breaking down after kind of the surprise jobs report shifted the narrative. The BOC is expected to hold. The Fed is expected to cut. That's a dovish divergence for the greenback. And technically, we have completed a correction. Um, we have put a high in, to be honest. We have completed, it looks like we have completed correction up to the 141 as well, because we're looking at this as a 5-wave leg and this as a corrective leg. So it looks like we're breaking lower down now, right? So I would be watching the short-term 136.70, the 135.47, and below that, of course, any pullbacks to the upside would be, for me, opportunities to sell, as long as we remain up below 139.68. Let's just call it 140. Okay, as long as we remain up below 140, we are biased to the downside. So drop your USD CAD setup in the comments and make sure to follow for more Shedra Bank and technical trade ideas.